All right, let's dive right in. The U.S. housing market at the end of 2025 gave us a real head-scratcher. Seriously, we saw something that on the surface just doesn't add up at all, so we're going to break it down.
So here it is. This is the core of the puzzle. The official data shows that sales of new homes were actually up 3.8% from the year before. You'd think that's great news for builders, right? But at the very same time, the median price for those new homes was down 2.0%. So wait a minute, more people are buying, but the prices are falling. How does that even work?
That's the big question, isn't it? What is really going on here? Is the market strong? Is it weak? It seems to be both. Well, stick with me, because in this explainer, we are going to unpack the data and get to the bottom of this mystery.
And it turns out the biggest clue, the key to this whole thing, can be summed up in one phrase: the great builder giveaway. That's right, the builders themselves are where we find our answer.
You know, as First American's Deputy Chief Economist Odetta Kushi puts it so well, incentives are doing some of the heavy lifting. And that's exactly it. To get people to buy homes when affordability is such a huge challenge, builders had to sweeten the deal. And when you look at the numbers, boy, did they get aggressive. Just look at the scale of this. A whopping 65%, nearly two-thirds of all builders were using sales incentives. We're talking about things like buying down your mortgage rate or paying your closing costs, basically anything to get buyers across the finish line. But, you know, it didn't even stop there. More than a third of builders, 36% to be exact, took it a step further. They didn't just offer some help on the side, they straight up slashed the sticker price on their homes. And this is the number that makes it all make sense. For those builders who cut prices, the average discount was 6%. And there it is, that's why the median home price fell. When more than a third of what's selling has a big price cut, it just drags the whole average down, even if more homes are being sold. So, mystery solved, kinda. But that just raises another question. Why were they so eager to make a deal? Well, it turns out this whole story wasn't playing out the same way everywhere. The pressure builders were feeling, and their need to offer all these deals really depended on what part of the country you were in.
I mean, just look at this divide. It's pretty stark. Sales in the Midwest absolutely exploded, up 30%. The Northeast also had some really solid growth, but then you look at the West, and sales were basically flat. And in the South, which is actually the biggest market for new homes, sales actually went down a bit.
So what gives? Well, it all comes down to one simple word: oversupply. You see, during that post-pandemic housing frenzy, builders in places like the South and the West went on a building spree. They built tons of homes on spec, meaning without a buyer already lined up. And now, well, now they're stuck trying to sell off all that extra inventory. And we can actually measure this oversupply. Right now, at the current sales pace, it would take 7.6 months to sell every single new home that's on the market. That is a pretty big number. Just to give you some context, the average month's supply back in the more normal years of 2015 to 2019 was only 5.5 months. So being at 7.6 months is definitely elevated. It's a clear signal that it's shifted to a buyer's market, giving buyers more power and forcing builders to compete with each other. Okay, so let's put ourselves in the builder's shoes. You're sitting on way too many houses, and you're having to cut prices and offer deals just to move them. What's your next move? Well, it's pretty obvious, isn't it? You hit the brakes, hard. And if you peek under the hood of what's for sale, you find the problem. Only about a quarter of the homes are actually finished and ready for move-in. More than half are still being built, and almost another quarter haven't even been started yet. That is a ton of future supply that's still coming down the pipeline. So, the only logical response here is to slow things way down. Builders saw this glut of homes and started pulling back on new projects. We saw housing starts, that's the number of new homes being built, fall across the country. But the drop was the sharpest exactly where you'd guess, in the oversupplied South and West. But hey, it's not all doom and gloom. The National Association of Home Builders points out that even with all these mixed signals, the market is surprisingly resilient. I mean, the fact that sales were up at all, even with all the incentives, proves that there is still a real, steady demand from buyers who want to own a home. So, all of that brings us to today and sets the stage for 2026. What can we expect from a market that seems to be getting pulled in two totally different directions at the same time? I think the best way to describe the feeling right now is cautious optimism. On the one hand, we've got mortgage rates coming down, which is a huge help for buyers.
But on the other hand, the overall cost of homes is still a massive hurdle for so many people. It's a classic tug of war.
So in the end, that 2025 paradox, it wasn't really about strong versus weak demand. It was the story of a market correcting itself, with builders in oversupplied regions doing whatever it took to make a sale. And that leaves us with the million-dollar, or maybe billion-dollar question for 2026. Everyone knows there's this huge wave of pent-up demand out there, buyers just waiting on the sidelines. The question is, when does it finally get unleashed?